Welcome to Growth and Inspire, where we examine topics that make us feel inspired and grow. I'm your host, Bonnie M, and Peter is my partner. Today, we will be discussing topics that has meaningful impact on how you monitor your 401k plan. Our speaker today is Mark Fowler, Director of Retirement Education from Human Interest 401k. Today, our topic is going to be on Secure Act 2.0, all the changes that will make saving for retirement more attractive. Welcome. So happy to have you on our podcast. Before we start, Mark, can you tell me a little bit about yourself and your company?
Absolutely. First of all, Bonnie, thank you so much for inviting us on. We're just delighted to be here with you. About myself, well, I've grown up. I started by essentially founding two businesses in New York. And then from that point on, I've actually gone into how do I support businesses on the small to medium side. Grew up through WeWork and then into a company now called Human Interest,
Yeah.
where we really focus on bringing the 401k to everybody, not just big elite
Mhm,
companies.
mhm,
So now we're put in a situation where we can actually bring small businesses to having a benefits package that aligns or competes against big companies.
Nice,
So,
wonderful. Yeah.
yeah,
That's great. That's what we want. A lot of the small businesses still don't have 401k plans. So yeah, we want to help them. All right, so let's just dive into Secure Act 2.0. One of the biggest things people ask for is like, all right, so tell me about the new contribution limits. But let's just start with like, what are the 401k current contribution limits and the catch-up limits? And talk to us a little bit about the catch-ups and then the enhanced catch-up, so forth, so forth. Go ahead.
absolutely. So, um, you talked about it that every year there is what's known as a cost of living adjustment. And that essentially tries to move these contribution limits in line with what inflation is doing to us all. And for 2025, those limits have just been nudged up for 401ks. And what we're seeing right now is that the standard contribution limit, so what you can put away from your own paycheck into your 401k account, if you are the age of 49 and younger, that amount for 2025 is going to be $23,500.
Nice.
Now, yeah, I mean that's a lot
Very,
of
very nice.
money,
Yeah, I know.
right? Um, the next part of that, though, is the government through Secure Act and other pieces of legislation have created a schedule of what they call catch-up contributions. So the closer you get towards retirement, the increased capacity to put more into your 401k.
Mhm.
And so now, if you're in the ages of 50 and up, so that's the year in which you turn 50, right? So you don't have to wait for your birthday. It's just the year in which you turn
It can be
50.
December, but I can start in January, right?
Exactly. There is a catch-up contribution for that, right? Of an increase of $7,500. So you can take that 7,500 and put it on top of the
Me
23 and a
three.
half thousand,
Nice.
which
Mhm.
by my rough maths makes that $31,000.
You got it right.
All right.
Yay.
And then the other part to that as well, which is brand new, and this is kind of exciting, is the fact that there's now what's known as in an enhanced catch-up contribution. All right. And what that is it takes the $7,500 and actually increases it for a specific group of participants. And those folks are between the age of 60 and 63.
Mm,
Right.
mm,
And again, that's the year in which you turn
mm,
60. And that's now moved up by an additional 50%, that catch up contribution. So
mm,
the 7,500
mm,
is increased by 50%
mm.
for that age bracket, which I believe moves us up to 11,250 for the catch up contribution.
Yep.
And so in that aspect, you can add even more to
Oh,
your 401k in that little period of time.
no, I know. Still better, any advantage I can take, it's good. Yeah.
And that's a very powerful thing. So if you're like if you are starting a business or running your own business,
Mhm.
having the capacity to put over $30,000 away for your retirement
Mm,
is a huge piece, right?
mm, mm.
That compounded over time is a substantial boost to your retirement plan.
Absolutely. Absolutely. Yeah.
And then there is just one final thing I want to add on to that. Not only does that enhanced catch up represent like the biggest jump we've seen,
Mm.
it's a 14% increase, and that's the biggest
Nice.
jump I think we've seen in 2 decades.
Nice.
But also 2025, that's the last year to save your catch up contributions pre-tax.
Mhm.
In 2026 and beyond, it will be a Roth contribution, meaning you have to pay the tax on it immediately and then put it as, in tax-free savings after that. Right. So if you want to save more
You
pre-tax,
guys do it
this is your
now.
year. Yeah.
Do it now. Well, for some people who just want to max the dollar amount, then I don't care. Actually, Roth gives me more.
Yeah.
So it depends. Yeah. Well, thank you. Thank you. All right. So let's talk about like startup credits. I know there are a lot of businesses who actually don't have a retirement plan. It'd be nice, if they get some good incentives, tax incentives to help them set up the plan. Can you give us some ideas, like what kind of tax credits they're going to get? Do they want to start up a retirement plan?
Yeah, absolutely. And you brought us in on Secure Act 2.0. And Secure Act 2.0 has possibly created the best time, certainly for a long time, to start a 401k because the government has given some really large incentives,
Mm,
particularly on the small business end of the scale, to start up a 401k.
mm,
Now, so the first part is they have the as Secure Act 2.0 suggests, there was originally a Secure Act 1.0 in 2019,
mm,
and they said, hey, if you start a plan, we'll cover 50% of the costs if you're a small business.
mm,
And they sat back and looked at it, and not that much happened.
mm.
So this time around, at the end of 2022, they actually moved it up and said, if you are a business of less than 50 employees and you start a 401k plan, amongst other qualified retirement plans, but if you start a 401k plan,
Mm.
you can claim up to 100% of the startup costs back as a tax credit for the first 3 years. And
Nice.
they,
Yeah,
they
100%. Yeah,
yeah, and they additionally added up to 100% or $5,000,
that's a
whichever you,
lot of money.
yeah.
And it's credit, not deductions.
Right.
Right?
So
Yep.
you're gonna get it, right?
Yep, I get it.
Um,
Free money.
that's for the first 3 years. So
Yeah.
potentially
Uh-huh.
up to $15,000 in tax credits spread across the first 3 years.
Yep.
And that's just part one,
Mm,
right? Part two is there is this thing called auto-enroll.
mm,
Now, for the majority of plans started after the end of 2022, you're going to be asked by legislation to have auto-enroll in your plan.
mm,
And what that means is essentially rather than you offering a plan to your employees and saying, hey, sign up if you would really like to,
mm,
it switches the mechanics and says, as an employer now, you are going to enroll all your people in automatically.
mhm.
And if they don't want to be a part of it, they'll raise their hand and say, please take me out of it. Right.
That's
Then
fantastic.
what that does is essentially moves the rate of participation hugely, like we've seen across the industry, from somewhere in the mid 30s%. We're now seeing up into the 80s and
Because
90%
they get
of
rolled in
your,
automatically.
yeah, because they're in automatically because people don't like to do more work.
It is
So
a
if you
lot of
have them
work.
in,
Yeah, yeah, it
yeah,
is. Yeah, particularly like for hotel groups, restaurant. I mean, they got lots of employees and they come and go too. So it's a lot of work.
100%.
Yeah.
And for that, you get, even though it's mandatory, and this is the thing that I'm sort of laughing internally about, is that the government is making people do this and giving a $500 tax credit at the same time for doing something they're making you do. Right?
At least I
I
get
don't.
compensated something, right? Yes, great. Yeah.
So there's potentially another $500 for the first 3 years,
Uh,
and then on top of that,
mm.
if you were to make contributions to your employees,
Company
those,
match, you mean?
yeah, company match or even profit sharing, if you're
Mm,
going that route as well,
mm.
you can actually get a tax credit up to $1,000 per participant, a matching tax credit for contributions you make to your
My
employee
employee.
who earn less than $100,000 a year.
More free money. I love it.
So when you start adding all of those together,
Mm,
on top of
oh,
the reasons for having a 401k anyway,
mm.
you can get, tax deductions and, the employee attraction and all that kind of thing. It can be a really powerful time to start a 401k.
Right. You basically help me take care of all my expenses, 100% of the startup. And then on the match, they said, are you matching me? Oh, yeah, yeah, yeah. Free money, so I should match.
Right?
I'm hearing this is 5 years too, okay? So, oh my God, and then you get some loyal employees. So it's good, it's good for everybody. It's good for the company, it's good for the employees. It's just good for everybody.
We think so. And it's, as we've said before, the the piece of the market we're trying to help at is at the small business end, and
I,
that's where so much of this
I
legislation is
agree.
pointed.
I agree. Yeah, yeah. And I think, they have no reason why not to now. I mean, there's money there too, and then you're doing good to your employees, they're good to your own pocketbook, so why are you not doing it? Yeah.
100%.
Yeah, wonderful. All right. So, and then let's talk about hiring. I know they're like, part-time employees and they might be long-term part-time employees, so they might not be able to access the company retirement plan. And we know hiring is difficult. So what did Secure Act 2.0 help in that regard?
Yeah, absolutely. And I mean, first of all, obviously, it's created a situation where it's more favorable to bring in a 401k in general,
Mm, mm,
right?
mm,
So that obviously has some impact on talent attraction and retention.
Yep, I'm getting
Just,
money.
yeah, just in general. But
Just
on
being very
top of
kind.
that, what they've started to do is encourage, or the legislation has started to allow more long-term part-time employees to access retirement. So the first part was they introduced legislation that said, hey, if you've worked 3 years consecutively of 500 hours a year of service, so really targeting a lot more of the part-time seasonal workers, right? You will be eligible for your plan. Then, on top of that, they gave us a sort of 2 year window. If you now have employees who have worked in 2023 and 2024, if they have 500 hours of service in those 2 years consecutively, they
Mm-hmm.
will now be eligible for your retirement plan this
Yep.
year,
Mm-hmm.
right?
Mm-hmm.
Which is, when you think about it, a lot of people don't associate a part-time job with having a retirement plan,
Exactly.
right?
Exactly. That's
So
another
now
thing to
when
say.
your business is out there competing for really good talent,
Mm,
even if it's just seasonal,
mm,
you've got that extra thing in your tool belt to
mm.
help attract people to your business versus somebody else.
And then you get $1,000 company match, so free money too. I put
I
some money,
like
some
I
money.
like the way you're thinking there, Bonnie. You're
Like
absolutely
a lot
right.
of free money. It makes
Yeah.
me happy. Yeah, I think this is great. I mean, like for them, forget about $1,000. Even like $100 makes a big difference in the lives because they're very tight in cash. So that's
Yeah.
great. Yeah, I know, like, actually, I'm just going to make a side comment. I know that Secure Act 2.0 has a lot of other benefits. Obviously, we won't be able to cover them all. Like using it to pay for a student loan and be eligible for company match, long-term care premium up to 2,500. You can use that to your 401k money to pay for long-term care premium. And then emergency account and so forth, so forth. It's just a lot. But I think, it's worth diving in and finding out more. And certainly, you have questions, you can give us a call and we can definitely help. You can explore with your TPA or your record keeper. So let's move on. Okay. Let's
Absolutely.
talk about something different. Instead of Secure Act 2.0, everyone is talking about technology. So can you comment on the resources that can help us run 401k plan more efficiently?
Oh, 100%. And I think if you were to look over the last decade at the 401k industry or even the retirement savings industry on a broader scale, I think the thing you would see that's changed the most is the technology infrastructure behind it,
Mm,
right? I
mm,
think we've all seen that banking has become a lot easier and a lot more online, and
mm,
we've all waited for that to follow through to other areas of our life.
mm.
Now, 401k is very much in that. We've brought in essentially, you know, we are now in the age where systems should be able to communicate with each other. And that it,
I
the
know.
idea of having to fax your documents, like that doesn't make sense in today's world, right? And so what we've got in this industry now is the ability for payrolls to talk directly to your 401k platform. And
Oh,
so that's what's called an integration,
mm,
that communication backwards and forwards.
mm,
And there's varieties of different integrations. I won't bore you with the details,
mm.
but a good integration allows for your payroll to send the necessary information about your employees, their sort of contact information, their email
What
address,
do they
age, salary,
contributing? Yeah, salary.
populate that directly in your 401k
Mm, mm,
account.
mm, mm.
Your employees come in and they make all their choices and how much they want to defer. That gets communicated directly back into your payroll system.
Mm.
And all of that happens with you as the administrator not having to do
With
anything.
anything. Wow. And also one site, I don't have to log on. One site for this, one site for that. It drive me crazy.
Who has time for that?
No, so
As
much
a
work.
as a
Yeah.
as a former small business owner, I was always scrambling to get something done for my business. I didn't have the time to stop and sort of add hours into my day trying to do something that I honestly, hand on heart, probably wasn't that good at anyway.
Physical
Uh,
labor, basically, manual labor.
yeah. So now all of that can happen, and it
It's
can
great.
reduce the amount of administration dramatically.
Hmm.
And of course, on top of that, when you start taking more people out of the process, the
Mm.
other part is not just the administration, but it's also the cost. So what we're starting to see now is the cost and the fees becoming lower and lower and lower.
Of course, yeah.
And then you've got the government coming in and saying, "Hey, we're going to give you tax credits for
We can
this
pay you
on
more.
top and on top and on top." Right? It's a great time to get into a 401k,
Mhm.
particularly one that's not going to add stress onto your business,
Well,
right?
integration, I think you mentioned a very good point. Integration is super, super important, particularly for small businesses. They really don't have the time. So it can be like just one signature, one piece of paper instead of like, so many different pieces of paper I need to sign and submit. That saved them a lot of time. And also like, for error checking, later on, that's make it so much easier. Yeah,
I,
fantastic.
Bonnie, you bring up an incredibly powerful point, right? Error checking. When a computer takes that record and hands it off to another computer, you've basically taken away the opportunity for somebody to make a
Yeah.
mistake in
Yeah,
that.
they forgot to file late and they make a
Yeah.
mistake. Yeah, write your name wrong.
I
Happens.
mean, this is one of the ways where technology is so powerful in our everyday lives, but really with the 401k, it should be something that adds to our lives, not takes away from our business,
Yeah.
right?
Make it simple, make it easy, and make it low cost so more people can afford it. And then government pay me some money too. So make it even easier. Easier decision. I think this is great. I love it. There's like all the reasons why we should be delving in and making the best out of all the tools and the possibilities and all the money that we can save for our retirement. I mean, this is a great future to look forward to. And there's no reason now after all the wonderful things that you talk about Secure Act and the higher limits and all that. It's all great. So, anything else to add, Mark?
Uh, the only other thing I'll add is on top of all these sort of incentives, is to just be aware of what's going on in your state, because there are things called state mandates
Yeah.
where state governments are now requiring people or employers to connect their employees to retirement benefits. And we're seeing it across the country. And the one thing, and this is sort of my soapbox that I'm talking to business owners, the one thing a lot of business owners don't appreciate is
Uh,
it's not where your business is headquartered. It is where your employees pay their taxes.
Texas.
So if
Great
you,
sharing.
I mean, a lot of states now it's 5 employees, some 10, but as of the end of this year, if you have a single employee in the state of California,
Uh-huh.
you will be required to connect that
Ohio.
person to a state
Yeah.
retirement plan.
Yeah.
So we're seeing it tighten in across the country,
Mm.
and that's something I want business owners to be aware of.
Yes.
And
Mm-hmm.
so with that, with Secure Act, with all the sort of
Mm-hmm.
different permutations around 401ks and retirement, if you need great resources, we work very, very hard at providing those with you for you. And you can find that on the learning center of our website at humaninterest.com.
Mm-hmm. Okay,
In
let's
there
check it out.
you'll have calculators, you'll
Mm.
have, the map of the different state mandates around the
Oh, it's
country.
important to know. Yep.
Um, and so there's a lot of resources there, and we'll be delighted to share all of that with you, Bonnie, and with everyone on the call.
Sure, yeah. Oh, actually, now that you mentioned something about technology, I remember there's a software called RI Extrema, and it can help you calculate your plan score. So if you're interested in how your plan is ranking against like the same industry sectors or like the size, number of employees, we can assist. Like so you know where you stand, and then you can make improvements and do better and better every year. So we can assist. And that's it. Thank you. Thank you, Mark, for that wonderful sharing. That's a lot of great information. Thank you, everyone, for attending today's podcast. And what Mark says, if you need further information, please reach out. We have tons and tons of material to share. It's always great to help. So, and also please leave us your comments. Let's get inspired and grow. Until next time, thank you.
Thank you so much, Bonnie.
Thank you.